Good morning. Don't you hate it when you're sitting around wondering whether this is going to start on time? And hopefully both the presenter is there and the attendees are there. Looks like everyone's starting to come on board now, so I'll just give it another couple of seconds, I think, as I see everyone logging on or connecting. But isn't it a wonderful morning, a beautiful morning after that rain we've had? And I wonder how many of you decided to go for a swim down to Oak Park this morning just to take advantage of some sunshine. I think the water's a little bit brr at the moment. Okay, we've got I think most people just about on now. And I hope you've got your best Zoom faces on. Hold up. Of course, you can see me, but I can't see you. It's a welcome to our sixth presentation since COVID. Whoever knew we're going to do this, this is the big digital revolution. Zoom meetings, I'm just reading, there's now 300 million daily participants in Zoom. And congratulations, you're one of those 300 million. Back in December, there was only 10 million participants. So that's the daily participants, not sessions. So, and some of the sessions have a lot of participants. So I think we're just about ready to go. Everyone seems to log on. So we'll get the presentation up, and thank you and welcome. I look forward to you getting some value out of this. And we'll just coming up now. Just have to wait for the technology. So today is actually about the update to changes to the federal government stimulus package post-COVID. And I commend the government for the action that they've taken in updating this, the JobKeeper, JobSeeker, we'll say rescue plan. I have always been an advocate that it should have been done for the tourism and hospitality industries, and the way they've gone about it this time I think is marvellous, because it does capture all the other industries that are not just tourism and hospitality. So that's some good thinking. Obviously, not everyone can win on it. There'll be people who will drop out, but it's still positive steps to help everyone through until we can get out of this problem. The unfortunate part is that it's coming back around a little bit with these lockdowns with Queensland and the little clusters in Sydney. But we will get there. We'll all get there together. Just got to keep positive. Just on some housekeeping, you can submit some questions in the questions pane, and we'll get to as many of those as possible during the presentation, but it'll be at the end of the first part of my presentation. Any unanswered questions, we'll get back to you. So don't worry about that. We'll send you an email. But please keep the questions easy for me. You should have already received email slides. So you can follow the slides on paper or on the screen, whatever suits you. So today we're talking about staying or becoming eligible for this stimulus package, the stimulus package Mark II, and the change to the JobKeeper and JobSeeker payment rates. There's some interesting changes to take place, quite clever, I think. And we'll just cover off some other stimulus updates that have been announced as well. And given time, we'll touch based on some survival tips, so you hopefully survive and thrive through this. And there is a light at the end of the tunnel, and working together, we'll get through that tunnel. So the packages will just recap. JobKeeper 1 currently expires the 27th September 2020. I feel most of you are across this now. We've had a lot of sessions on it, a lot of conversations, and everyone's already been, those that have been lodging their JobKeeper declarations fairly early at the end of each, or at the start of each month, and the money comes through very quickly, so that's excellent. But JobKeeper 2.0, I love this as 1.0 and 2.0. Anyway, JobKeeper 2.0 is they've extended from the 27th of March to September to the 28th of March next year, but it's in two stages, which we'll cover off shortly. The key point though, you must have been in business as at 1 March 2020 to even get on the journey for JobKeeper. The good news is there's been no change in the decline in turnover percentages applicable to any claimants for JobKeeper. What that means is that businesses or small businesses still, if your revenue reduced by 30% or more, you're eligible for JobKeeper. But if you're in the big business world of $1 billion or more, your revenue must have declined by 50%, and charities is 15%. So they're the same, but I would suggest all of you watching today are in the 30%. So we already know how this part works, which is good. But on JobKeeper 2.0, it's broken up into two components. So we have from the 28th of September 2020 to the 3rd of January 2021. Okay, so that's stage one. And you measure the decline in turnover using your actual GST turnover as per your BAS. But it covers each of the quarters end for June and September 2020. So what we mean by that, is the GST turnover is what you report on your BAS. There's been a lot of confusion early on as to what's what. So GST turnover excludes, my point of view, excludes GST, but it excludes input tax turnover as well. So pretty simple to work out. If you're on a quarterly BAS, you already know it. If you're on a monthly BAS, just add your three BASs together so to determine what your current turnover is. Then you just compare it to the same period last year, 2019. So it's fairly straightforward, and I'll go through a couple of worked examples in a minute on that. So if you pass the June and September reduction of 30%, you're in the game. But from 4th of January 2021 to the 28th of March 2021, when it finishes, 2.0 finishes, again, you measure the decline in turnover using actual GST turnover as per BAS, but you must have satisfied the decline in turnover for the June, September and December quarters. And you compare that to the same period, 2019. So 2.0 is different to 1.0 in that you look at your turnover retrospectively in order to claim prospectively. Whereas in the 1.0, you had to estimate what your turnover was going to be. And you had to estimate the reduction. So this makes it fairly well black and white. Like at the end of December, what is your turnover? Now, this is quite interesting. 31st of December, New Year's Eve, New Year's Day, and you want to get those numbers in very quick. So your BAS for December is not due to 25th of February. And so, but of course, you need to start paying your JobKeeper wages very early January. So it's going to be quite interesting how busy we are kept and you are kept and the bookkeepers online getting the BASs done. But it's going to be really important to be on top of this. So here's just quite a simple example. You can see that I have calendar 2020 and calendar 19. So the GST exclusive sales, they've got the comparison for the quarter that ended June. There's 328 versus 470,000. They've got a decline in revenue of 142,000. So 30% decline. Yes, we're in. Well, you're in, but in order to go to 2.0, you need to. There's another phase. You need to look at September. And for the quarter in September, as you can see, this particular client, unfortunately, their revenue dropped only by 80,000 for the quarter, minus 17%. They're out. So effectively for them, the 27th of September is the end of their JobKeeper fortnight period. So, a bit of a shame, but they're the rules. And just an example for moving into the second phase of 2.0, looking at a client for the December balancing dates, the December quarters, I should say. So the revenue change for the first quarter is minus 30%. So they're eligible. Second quarter is minus 31%. Yep. So beauty. At that stage, that they were eligible for the first phase of JobKeeper. So you're there for December up to December, and then with a 31% for the decline in December, which is a yes. So for all three periods, they're a yes. That sounds like one of those TV shows. A yes for me. So you're in for the December quarters. That means you're in JobKeeper 2.0 right up to the end of March. So that's good and bad news. But the good news, if you need to be in, you're in. So there are some new rules in 2.0, employee eligibility. This has been brought out to deal with, I believe, the casual workers who were suddenly going from a $300 wage a fortnight to a $1,500 wage for a fortnight. So they brought in the 20 plus work hours test and it looks back to February. So once we now go into the phase or 2.0 of JobKeeper, to be eligible for the full-time JobKeeper rate, you have to look back to February and see if you did 20 hours or more in actively engaged in the business, either as a business participant or as an employee. So in the 4 weeks of February, before the 1st of March, 20 hours or more, you're in for the top tier money. It will be up to the ATO discretion to apply alternative test if employees' hours were not usual during February, the February reference period, and that could be the case of someone being on annual leave, so you could say they're not actively involved. So I've got there's a technical thing, but I'll have to keep going. So, so if they were annual leave or on study leave, the ATO will look at that. But what's clear here is that the casuals that were working less than 20 hours in February, for the month of February, will be reduced onto the lower levels. The other eligibility rules is that continues for sole traders, partner, partnership, beneficiary, trust, shareholder, and other eligible business participants. So it is the same. We're used to these rules, so there's no changes there, which is good. And don't forget though, the casuals had to, that are in the game, that is, if they got less than 20 hours, they had to have been employed systematically and routinely for 12 months, more than 12 months, as at 1 March 2020. So there's no changes for those casuals as such. So JobKeeper payments, interesting. Here we go. So I've told you about the plus 20 hours and less than 20 hours, but up to the 27th of September, you're all aware it's $1,500 a fortnight. Okay, but into JobKeeper 2, the first phase between 28th of September and 3rd of January, the full-time rate reduces to $1,200 and the less than 20 hours reduced to $750 a fortnight. But from the 4th of January to the 28th of March, the full-time rate reduced to $1,000 and the part-time or the less than 20 hours reduced to $750. So there certainly is a significant drop in the less than 20 hours, which is probably realistic. Certainly cover those people that went from $300 a fortnight up to $1,500 a fortnight on a casual job. Okay. So just a reminder, some people may not have qualified for JobKeeper 1 and said, okay, I'm not eligible. But it is still eligible for employers and business participants that didn't comply if you go back in March or April and May. But now if you look at the decline turnover for April, May, June, and then we get to July or September, if your decline turnover passes the 30%, you can come into the game there and lodge all the documentation. The key is, as in before, employers will continue to be required to make employee payments. So this is a bit of a challenge to start with, but it's something we're used to, and we have to keep doing it. You have to pay in advance before you get your money. Important thing to note is that nothing happens before the end of September. We have plenty of time to deal with this, to deal with any changes, to have any more understanding, see what comes out. So so we've still got the end of July is tomorrow, but we then have August and we have September. So there will be changes to come through, more explanation from the government, but they certainly have got a good documentation out in quite a quick time. So it's very impressive. Just there it is. In 28th of March, it's finished. So hopefully, COVID might be finished as well, but of course that's a big hope, isn't it, without any vaccination for it. So following on from JobKeeper, then we look at apprentices and trainee wages. And those that have been claimed for apprentices and trainees, they already know what the rules are there. But they've extended it now up until the 31st of March next year to support not only small businesses, which it was up until September, but they've extended to medium business. So business with less than 200 employees are now in this. So then they apply for wage subsidy of up to 50%, and which is up to $7,000 a quarter. Now, again, we commend the government because this is good. We need trainees, we need apprentices, and we need people in jobs. So providing support to businesses to encourage people to enter into these areas is good for the country. So that's good work. Job Trainer, there's been an announcement about $1 billion in Job Trainer, which is funded by both the state and federal governments. It's to upskill. There's more details to come. It's to upskill school leavers, job seekers, more information to come as the government develops in that area. again, they're putting money into the right areas. Okay, next part is JobSeeker 2.0. The current situation is that under the COVID-19, there's a supplement of $550 a fortnight provided to JobSeeker people, which means that they get $1,100 per fortnight. Those rules change from the 25th of September, such that the supplement drops down to $250 a fortnight. And so the JobSeeker people, their income will reduce from $1,100 to $800. But this runs out the 31st December, New Year's Eve. That's it, you're finished with your JobSeeker. Hopefully the JobSeeker's been able to find jobs, but we know, again, in tourism and hospitality, it's quite difficult to find jobs. A concession there that in the new version of JobSeeker, that you can earn $300 a fortnight from your casual job without any adjustment to your JobSeeker income. So that's quite good there. And there are some other rules in terms of mean testing, other bits and pieces, but these are the key nuts and bolts. Just importantly, if you know of anyone on JobSeekers that has had to move out of their property they own and rent it, and Centrelink has said, oh, the rent received is income and will reduce your JobSeeker payment. They've been processing those applications incorrectly because they had no idea that you can actually claim your interest expenses and rate expenses. And with a couple of clients, we had big wins by pushing them to tackle Centrelink, and I actually went on and went to the legislation to be able to prove that. And so, and people were actually able to get back pay for their JobSeeker income. Okay. Early access to superannuation. That's been extended to the 31st of December. So it was due to run out the 24th of September, but this allows eligible people early access through MyGov of up to 10,000 of their superannuation. And so that's up to the 20th of 31st of December this year. The good news is when you access, those that have to access don't have to pay tax on it, and the money withdrawal will not affect any Centrelink or other pensions. Whether this is good or bad news, that's hard to know, but I'm sure that most people taking the money out will have needed it. It's interesting that the money taken out up to date is $28 billion. That's a lot of money coming out of the superannuation industry. But I'm told that overall there's only about 250 odd million came from self-managed super funds. So it's quite interesting there. And the average withdrawal is about $7,500. So that's up to just last week. So that's a lot of money coming out of there. And yeah, I'm not an advocate for taking it out, but of course, if you need it and you have to do it and you haven't got any choice, your back's to the wall, do it. But this will come back and bite later on, because the compounding effect of having money taken out of your super, the compounding effect of that for when you retire is quite significant. But it is what it is. It is a good concession, at least for the government, to allow it to you. But the early access, there are rules. You have to be unemployed, or you're eligible to receive JobSeeker payment, youth allowance, or parenting allowance. That's one of the rules. Or after January, and after 1 January 2020, you're made redundant, or your working hours reduced by 20%, or if you were a sole trader, your business was either suspended or there was a reduction in your turnover of 20% or more. So that's the early access side of things. SME loan guarantee scheme, that has been extended now. So it will run from October 20 to June 2021, and it'll give businesses access to up to $1 million at low interest rates for a 5-year term. This loan will be government guaranteed of 50%. Now, it's easy to say that. Now, the devil's in the detail. Go to a bank and apply for one of these loans. They're not easy to get. The banks are very, very, very slow at approving any loans, let alone one of these loans. The issue on round one of the loan guarantee scheme is the loans had to be paid within 2 years. It was just impossible. We had clients looking at it and said, well, not much point borrowing the money, and the repayment period over 2 years, I can't afford it. So, tread carefully with this. Make sure that that you can afford, if you're going to borrow the money, make sure you can afford to pay it back, because money is easy, but giving it back's hard. Although in this case, getting the money is not easy, but maybe the banks have improved their system. But 2 months ago, it was very difficult. Now, the New South Wales state government has also pitched in to help small businesses. So if you had an ABN as at the 1st March 2020 and your annual turnover was more than 75,000 and you've got less than 20 employees not paying payroll tax. So if your industry is highly impacted by the COVID restrictions on gathering, etc., then there's a state government business recovery grant available. Now, the industries, industries include accommodation, I'd say hospitality accommodation, real estate, etc. There's a full list on the government website. There's the link to it there. We were surprised. We had a couple of clients thought may be eligible for it, but they were not in the affected industry. So yes, they're affected, but they weren't in the affected industry. But to be eligible, you must have experienced a decline of at least 30% from March to July 2020 compared to an equivalent 2-week period in 2019. And you'll incur costs associated with safely reopening. So this is why some industries that are not eligible for the grant, because they never closed down to safely reopen. Yes, their income dropped by 30%, but they weren't incurring safely reopening expenses. You apply online at Service New South Wales, and the income that you receive is taxable to your business. So you've got till the 16th of August, so you've got a couple of weeks if you're in one of those industries that's been affected and you want to safely reopen, you need to apply by the 16th of August. Now, what we have now is the opportunity to ask some questions, and so we're just going to call up the questions. What have we got? So here's a good question from Robin. Do we need to be eligible for JobKeeper 101 to receive JobKeeper 2? No. There's a new testing on this that you'd look at the June and September quarters and just compare them to June and September last year. And another part of the question was, do we use the alternative test for JobKeeper 1? Will there be alternative test for JobKeeper 2? I believe the answer is yes on that, but let's wait. As you might recall, for JobKeeper 1, the rules changed daily and they got more sophisticated. So yes, there has to be an alternative test because some businesses significantly changed in the same period last year versus this year, in that they might have either grown, extended their business, or they might have sold part of their business. So I would believe the answer is yes to that. How will the ATO know if employees have worked the required 20+ hours per week on average in February? It's a good question, Melissa. I believe this will be a self-assessment type thing, and the ATO will be making inquiries. So everything they do, they're looking at how valid your declarations are. So it'll be the self-assessment. You'll be signing a declaration, and if you sign a declaration that proves to be incorrect or false, there'll be stiff penalties. So that's the process that I believe will be adopted. There are other questions. Hey Joe, this is a good question. For JobKeeper 2, will the BAS actually need to be lodged or just assessed for the sales to meet the eligibility test? Absolutely right. You just have to know what it is. You will not be lodging the BAS. The ATO have acknowledged this. That's why I make the point that in January, the first week in January, you'll be scrambling to work out what your income is in order to pay the wages that might be payable on the 3rd of January. So no, the BAS definitely does not have to be lodged. It's your self-assessment, and hopefully the self-assessments will be correct. And that also applies to the September BAS as well. You need to know at the end for the quarter end of September what the quarter turnover is. So you not lodge the BAS, but you need your income. Let me see if we've got any more. That's pretty well the questions. That's good. So I think everyone has a good understanding by now of JobKeeper 1. And JobKeeper 2 is a simplification that we're not having those rules changed daily. That was just, it was horrible. It was a nightmare. But most of the rules, the ones that changed daily, were for the benefit of all the recipients. So, yeah, we would give an answer on Monday morning to clients at 10 a.m. and then by Monday at 3 p.m. the rules changed in favour of our clients because we didn't know, and the government brought all this stuff out in like 1 week. That's never heard of before. Yeah, but we've got other tax legislation. We've been waiting 2 years to get on the table, so to get this out so quick is great. So it's stay tuned. So that covers the questions here. So what we're going to do is go to the next part of my presentation about surviving and thriving in this new world that we're in. It's going to come up. Just bear with, be nice and patient. Well, you got me back. Okay, some survival tips. Let's go back to some basics. We always think, working with our clients, we want everyone to be financially well organised. So what does that mean? It means know your numbers. That's really important. I ask successful business owners, what's the key in their business? And it's knowing your numbers. I just get amazed how much detail that they go, and they work out there's some numbers that if they know certain numbers, their business will be profitable. Don't have to have everything. But prepare a profit plan for the next 12 months. So if you don't prepare the plan, then you've got no direction, no guidance as to what you want to achieve. And people do say, but I don't know what my profit plan will be for the next 12 months. So my answer is, well, start with the last 12 months and build up on that. What do you want to achieve? It's up to you to decide that. And then you create a cash flow forecast for the next 12 months because cash is king, and it's no good having a profit plan without knowing where your money is, when your money's coming in and when your money's going out. Certainly that's how we run our business, and many of our clients run their business based on the profit plan and the cash flow forecast. Because you can make sales, and if you don't collect your money from the sales, you're going to struggle with cash. Set KPIs. You already know what KPIs are important to your business, and the KPIs such as gross margins, conversion rate of quote to sale, inquiries, customers through the door. There's many different KPIs, and I'm not going through those today. And understand what your break-even revenue point is. So if you know what you sell, your basic sales will be to at least have your business break even. There's your starting point. Then also know what it costs to run your business on a daily basis or on a weekly basis. Just start digging into the numbers, get financially well organised, get control of your business numbers. Second tip is focus on your customers, and especially during this COVID period, just service your existing customers well, ensure they're happy. Yeah, take some extra time out just to nurture your customer base at the moment. Everyone's wanting a bit of love, and now's the time to give it. Then start digging into your business. Look for any unconverted leads you have, and people are slow to make decisions. Just because they haven't taken up the offer doesn't mean that they're still not interested. So just go through any inquiries you had and see if you have an opportunity to raise them up into a sale. Also, just re-engage the previous customers to see if there's anything they need. Depending on what industry you're in, they could be just sitting out there. They might be buying off another supplier, but you re-engage with them, they're back on board. And talk to existing customers. Just keep talking. Ask if they need anything more. You'll be surprised. Just take the time. Share the love. Product and service. Have you considered packaging or bundling products and services together? Instead of selling one thing, sell something else with it. Look at home delivery for some products. There's plenty of home delivery going on. Boy, those vans keep coming up and down the street. Are you able to sell your products online? You have a digital storefront. That's where a lot of certainly products are going. So just explore what's available for your business. Tighten your sales process. Keep marketing in this environment. This is not the time to slow down. This is the time to just do whatever marketing has been successful for your business in the past. Keep ramping it up. And marketing doesn't mean spending money, by the way. It doesn't mean spending a lot of money in advertising. You can do a lot of digital marketing. You can do marketing not just through LinkedIn or through Google. So keep being involved. Get your reviews of your website up there. Put a marketing calendar together of activities to action each week. So looking forward You know, what do you want to do to market your business that's going to create some action? And identify who you want to be selling to and how you're going to get to them. So who's your prospect customer? What's your offer to them? How are you going to get it to them? Think that through and then put that into your plan. Just as an aside, if you have unprofitable customers, get rid of them. If they're dragging you down, if all you want to do is fly in your business and you're dealing with someone that's just holding you back, you know the ones I mean, get rid of them, free up your space. You'll feel better for it. Grow your business. Now, building a business and growing your business is really simple. There are just 3 ways to grow your business revenue. That's to increase the number of customers you have, increase how much they spend with you in each transaction or annually, and increase how often they buy from you. If you focus on those 3 areas, your business will grow quite substantially. So if you can take any of those tips away, that you'll achieve some success in your business. Final words of warning, just avoid the media noise. There's so much hype out there. There's great stay in your own lane. So know what your business is about and go about it and just don't get sidetracked with all the fluff that's out there. You have control. It's up to you to take your business where you want it to go and to monitor all the key areas and make changes if required. So just, again, you know your business, go forward with it. And so thank you. I have a saying that I want to share with you before we wrap up is, here we are in this world, this COVID world, pray for the best, prepare for the worst, and expect the unexpected. Well, we've had the unexpected, and hopefully there's not too many more unexpected. So let's go forward in a positive way. Is there any more questions? I don't think there's any more questions come up. So, well, we've pretty well covered everything I've had to say. So I wish you all the best with your business growth in the future. I wish you the best with JobKeeper 2 and JobSeeker and any grants. We're here to help you. I'm more than happy to support. So with that, I'll sign off. It's Terry Dewing. I forgot to say it was, by the way, Terry Dewing, a director of Sullivan Dewing. I know you're used to seeing Jenny Wilcott, but I've taken over for today's session. So thanks for attending and thanks for supporting Sullivan Dewing COVID Zoom conferences. Bye.